What's going on, guys? Can I get a mic check? Mic check. Any of you took any trades so far? What's up, Wayne? What's up, TR? All right, cool. Let's get it started. So we're just gonna go over. It's just a weekly prep. What I like to do with the private group. Just gonna give you guys a taste of it, so it could help you guys out throughout the week as well. So you know what to pay attention to. Just to take advantage of some really good tradable opportunities. Obviously, if the markets present itself. But you took EUGU, yeah, good job. So let's start it off with the Jackson Hole. Last week, I was letting you guys know also how important this event was due to Jerome Powell actually giving us something important for a tradable opportunity, knowing that this was also going to be his last Jackson Hole meeting as well. We know that he's dealing with the pressure of the White House, right? They're going to try to fire him. They wanted to fire him. Most likely they can't, but that pressure is what's most likely leading him towards that dovish outlook that we all got by surprise on Friday. Okay, so the key takeaways that he said, these meetings are extremely long, but you want to pay attention to the details, right? Where they give us something valuable for us to take it as a tradable opportunity. Like what did he say that could cause us to understand if he's actually going to cut rates or hike rates, right? So what we understand from a dovish perspective, what we need to hear from them in order for us to trust that they're dovish. This is what most likely it was a lot of information, but the key ones was he confirmed that the labor markets are easing. He gave us confirmation that he's seeing slowed growth happening in the US economy. And one of the key things that stood out to me, especially when I did the live call at the private group, was the inflation impact from tariffs was going to be short term. He was expecting it to be temporary. So that's what really led to us taking advantage of tradable opportunities, right? From that meeting. That's why we saw equities did push higher. We saw dollar get weaker. To me, that was the key giveaway, was him confirming to us that it's all temporary. I needed to hear that too, but it was very good that he said that because he really wasn't confirming a lot during these rate decisions. He also gave away saying that in order for us to be in neutral territory is 100 basis points away. So when it comes to basis points, every meeting there's 25 basis points per cuts. So he's expecting 4 cuts, right, to happen for us to be in normal rate territory to get out of restrictiveness. Moving forward, what we're going to focus on, especially this week, is US GDP, US PPI, and jobless claims. Okay. So, in order for the markets to continue to give us that dovish reaction of stronger equities, weaker dollar, we will want to see weaker GDP, weaker inflation. That's what's going to give us that confirmation. That's what's going to give us further confirms of the direction that we already having. So now it's like, what do we want to see for the opposite, right? Market reactions. Let me go over this first. But market reactions that happened on Friday, we saw weakness in the dollar and the yields, confirming the direction of a rate cut. Then, if we're expecting more dollar weakness, right, we want to see weaker dollar with price action, but also economic data and news headlines to confirm. Equities did push higher after the Jerome Powell meeting because rate cuts, expectations of rate cuts is supportive to stocks. All right, we understand that part. But what we have to look out for, just to give you guys a caveat, is if the feds are likely to start cutting rates because the fear of bad growth, like recessionary fears, that is most likely going to hit the equity markets negatively. Most people is going to look at it and say, hey, why is the stock market dropping if the feds are cutting rates? This is where paying attention to detail is what matters, right? He's still saying that the growth and labor is easing, but it's not falling off a cliff. If they give us fears that growth and labor is extremely bad, that's what is going to impact equities for that downside reaction. I'm expecting a leg lower, right? I'm personally expecting it, but to me, I feel like the stock markets is waiting for something, but we at this current moment, nothing is really signaling downside in the stock market at this current moment. But something can happen that could trigger it. So I just want us to be prepared and alert for that. All right, moving forward. So now, what we're going to see continuations this week, right? What we're going to be paying attention for. I would expect continuations of weaker dollar and upside in equities for the best tradable opportunities, right? But in order to get that, like don't just take random trades just like, oh, I expect dollar weakness, let me take a sell. I expect equities to buy, let me just place a buy, right? Anticipate consolidation or pullbacks, right? Once we get an impulse, there's always going to be some sort of a correction. Let the correction happen. And usually, if you want to align the breakouts with reasons, right, with weaker GDP, weaker inflation data, or even Fed speakers coming out, that could set out for some opportunities to take those trades out of the correction. If you guys want to take just technical trades only, that is totally fine, but just be cautious, right? Because, markets are forward looking. Answer your question. I noticed that equities went straight to all-time highs and then pulled back. Yeah, exactly. I'm personally expecting some sort of a pullback in equities too, especially with Intel giving up 10% of their earnings to the U.S. government. I want to see if the government is going to try to do that to more tech companies too, because that will be another indicator for a drop in NASDAQ. I think that's going to be the case. Russia, Ukraine, we're not really seeing much on that. I think that they're just going to continue to kick that can down the road. I don't think we're going to really see no peace with them right away, but it already tells that the markets really don't care. I'm not even focusing on geopolitical tensions no more personally. So holidays. Today is a holiday for the United Kingdom. So today, if you're trading, the UK 100 is closed. So trading the pound pairs, just try to be cautious with that. Now, upcoming events. All right. So these are your opportunities that you could look for to take advantage of dollar, right, or equities, at those time periods. So Tuesday at 10 a.m., we're going to have consumer confidence. Consumer confidence is just U.S. economic indicator measuring optimistic or downside in what the household feel about the economy pretty much. So does the Federal Reserve really care about people's feelings? Not really, but it also does help. If we see weaker consumer confidence data, it shows people, consumers like us, how we feel negative about the U.S. economy, which could also drop the stock market, okay? But that could also be bad for the dollar. So in that opportunity, what I would look for, if we get a weaker print, I would say that depending on how bad the consumer confidence print is, if it's like a total miss, a very, very bad print, I would definitely look at that for a drop. I would look at for downside in equities, but also downside for the dollar. We also have Australia's CPI. So if you guys love trading AUD, that is a perfect opportunity. Stronger inflation should help with a stronger AUD currency. But I think the best opportunity is taking advantage of a weaker print, because if we get a weaker print, that increases the odds that the Reserve Bank of Australia is going to cut, right? So that gives us an opportunity to start taking sells. Then a higher print looking for buys, more than likely the RBA is not going to hike rates. So it's just going to further procrastinate AUD. So the best opportunity for me would be looking for a miss. Then we have GDP on Thursday for the U.S. So understand that GDP, domestic producer per quarter, right? It's going to be about growth, right? How each economy is growing compared to previous quarters. So if we get a higher print, it just shows that the economy is still strong. A weaker print is what we want, right? In order for the feds to enable more rate cuts. That to me would be the best opportunity if we get weaker GDP and then unemployment claims as well. If that could show more people are losing their jobs, that would further probably be the direction for the month if we get those numbers coming in worse than expected. And then on Friday to end it, we have PCE. So this is the preferred measure of inflation that the feds focus on. So in a perfect world, if we could get this week weaker GDP, weak unemployment claims, and then weak consumer confidence, and then weak inflation data, that would be a perfect world, right? We'll definitely take advantage of a weaker dollar. I think that would lead to the best tradable opportunities if we could take advantage of it. But the way how the markets always be, consumer confidence is strong, GDP is the same, unemployment claims be strong, PCE is lower than expected, right? So it's hard to trade those events if you don't really know what to pay attention to. But like, I'm here to help you guys out, so just ask questions if need be. And before the rate decision, I try to give you guys a prep. If you're not in a group, I try to give you guys a prep for opportunities. With earnings this week, the only thing we got to pay attention to is Nvidia. If those earnings comes out bad, I think that could be the catalyst for downside in Nasdaq this week. I would definitely say focus on that on Wednesday after market close. If we get a huge miss in earnings for that, I think that would be a key indicator for downside, and especially in Nasdaq will be very key. All right. So if you guys have any questions, I'll leave it up now. Put a one in the chat if you guys are good. Because now we're going to look at the markets, look at tradable opportunities. So it's probably not going to be good for you guys on Instagram. So just go to Facebook. Go to YouTube so you could get the horizontal layout. Yeah, I'm going to talk about gold now. Yeah, I didn't really. I'm gonna look into the ECB and United Kingdom. I was listening to President Lagarde. I know today, like she was I know she was in a radio station today talking about. They was trying to question her on a way where how come you're cutting rates and how come you're cutting rates and the Feds is not? So it's like they're trying to bait her into that. They really didn't ask about the economy, but pretty much it's all self-explanatory. Like the Bank of England, they're still concerned about higher inflation, right? They want to see certain numbers come into effect in order for them to cut rates. ECB is like they're ahead of the Feds. Like they've been cutting rates like like drastically, right? And inflation for them is kind of going down. But this week we do have Euro CPI, so inflation this week is going to be important as well. I was wondering what's your best strategy for gold on a daily basis. Aim to, you could join a private group. Like people in a private group, they killing. That's mostly like what they trade is gold. It seems like a lot of you guys love gold. Like if you just, yeah, just give you guys a taste. Just go to gold. We have a personal gold chat, and they just extremely active in here, especially like Asian session, New York session, just very active. But yeah, if you guys are into gold, like a lot of the members are into gold too. All right. Didn't a headline come out over the weekend saying traders dropped their cut expectation to 75 down to, yeah, I mean, the expectations that it's really a focus after economic data when it comes out. So like you could be in the right direction, right? So what Jerome Powell said, it was dovish, but still we still need economic data to still confirm it, right? Where it's at the end of next month. So we have a lot of data that could happen. So even though like I expect next month to end out in I feel like next month is going to end at 50-50. You know what I mean? Like when it comes to a cut or pause, that's what I'm assuming. That next month we'll probably get to a 50-50 unless we just have a miss in all data. So I wouldn't like look at the CME like the CME report for expectations as something to marry. That could change every day, any situation. So like just use that with a grain of salt, like after data comes out, and let's see if the market expectations confirm that. Like so if we have GDP right now, it comes out lower, then you can see if the CME group, if they're anticipating more of a cut. If that cut percentage go higher, then that's when we see weaker dollar, right? But like we have data today and then you look at it tomorrow, the day after, it may change. You know what I'm saying? So I wouldn't look at it from that perspective. We still need more data to follow. Do earnings affect the stocks? Yes, like Nvidia this Wednesday will affect Nasdaq. If especially if it comes out weaker than expected, I'll look for sales. But the hardest part is Asian session, you know. So we'll be looking for sales during Asian session. But sometimes the markets preset it. Like you'll see like equities will start dropping before the earnings come out. Yeah, exactly, exactly, Dylan. All right, but yeah, like so, this is why at least you guys can understand, the patience, right? Like it just takes patience. So why did gold push higher? Obviously because of weaker dollar and weaker yields on Friday, right? So after we get an impulse, it tends to give us a correction. So when it comes to gold, like I don't really expect much to happen this week. I really don't. I'm not expecting like war tensions to come out. Uh, yeah, I'm not really expecting them. I'm not expecting war tensions. I'm not expecting Russia Ukraine. I'm not expecting any of that reasons for gold to push up as a safe haven. I definitely would like to see gold like this week. Personally, I feel like what will best suit you guys for trading gold is going to be technicals, right? Or also watching the opposite of the dollar and the yields. So if we get like PCE is a good idea, a good opportunity, and it may not happen now, right? But just set your alerts at this range that we have on gold. So the numbers might be different, but this is the 30-minute time frame, right? We have a resistance around 33.76. We have a support around 33.60, right? So it's highly it's more likely if we break structure, gold is going to more likely in a higher probability go within that direction. Okay, so what causes gold to push higher? If we get weaker dollar, weaker yields, right? That gives us that extra confirm. If we could get like a Fed speaker, I'm not expecting today, but sometime this week, if we get Fed speakers coming out confirming a cut in September, that will then you're going to want to see if the dollar and the yields is also pushing bearish. If that does happen, don't just take buys on gold right away, but use that as like a added confluence, right? You're not going to want to sell gold if we see weaker dollar, weaker yields, right? So you can use that as an opportunity to say, okay, I should be looking for buys pretty soon. But if we break above these highs, right, and we start breaking above structure, I'm not expecting gold to fly to the moon, but that could lead to a good scalp opportunity, maybe for a good scalp over Asian session, most likely, because it seems like New York, not really a lot of volume, probably after 9:30 Eastern time. I would say that could probably give you the best opportunity for a scalp trade is looking for those highs. But what could possibly happen, right? If gold does push lower and we start breaking below that 3360 zone, I can see gold coming back to around 3350 range, retesting this zone here. And if I don't see anything change, right? If I continue to see when it comes to a dovish Fed, right? I don't see anything change with geopolitical tensions. I'm not seeing anything that's really impacting the markets. I'm gonna still be looking for upside in gold because I'm still more of a buyer long term, right? So I want to see in a technical stage where if we could hold a support, and then if we can consolidate, look for that break of structure pushing back to the upside as we start breaking above this zone, right? Or safer buys again is going to be once price break below 3360, and if price can recover back above 3360, that will be an opportunity for me to be looking for buys back to the upside. Okay, because I'm not a long-term seller yet unless we have more peace talks. We see dollar starts gaining strength, meaning if like if we see that the feds are hiking rates, like which is highly unlikely, right? And sometimes we could get some profit taking moves on gold, right? Because the markets can't be one sided. And ideally, I would like to see a correction like this happen. So I want to see if gold could give us some bit of relief, right? Push into those lows before we can start pushing back up for some good opportunities. If we don't see that and we just consolidate within this range, don't take a trade. All right. Don't trade within consolidation. Just let the markets do its thing and wait for a better opportunity afterwards. All right. So me personally, when it comes to, I think I put it here too. When I'm, what I want to wait for is like, where did I put it? Yeah, because like what I want to wait for is I want to wait for a reason. So that's what helps me be consistent. Like some people want to work on discipline, right? Patience. Me, I want to wait until I have a reason and I have confidence in a direction. So I'm not going to just take technical buys or technical sells on gold just because I see price action. Sometimes you can do it. There's nothing wrong with that. But if you take a loss, you understanding that it's 50-50, right? Because you don't have no confluence after that trade. So if I take a buy on gold and I have reasons for a weaker dollar, weaker yields, that gives me more confidence in that move, and that's when I'll take the trade. Normally, the confidence do come in when there is economic data. Okay, makes sense, guys. All right, so I'm gonna just end this here. This is for the weekly prep. So I'm gonna catch you guys tomorrow when we're gonna do more on technicals. All right, guys, and we're gonna look for opportunities. So have a good one, and I'll see you guys in the next stream.